Good morning, everybody. We are excited to be here to discuss 2020 COVID-19 insights. It's been an exciting over a year now, and we definitely going to focus in on food service, retail, and processors, and how each of those have kind of impacted each other. So as we get into the details throughout the slides, I know we'll be doing questions at the end, but we look forward to following up on those areas. Today we're going to have two of our presenters from Radian, myself, Jason Rumley. I've got 25 years of experience in food retail, and Robert Norris is one of our directors who brings over 30 years of experience and works very closely with a lot of the stuff in fresh, primarily a meat background, and we'll be speaking to a lot of the things where it's impacted the processors throughout the presentation. A little background about Radian in general. We've been in the business for over 20 years. Our focus and strengths really do cross across retail, food service, and the supplier community. Where we do focus in is around business planning, research, sales planning, third-party analytics, big data and management of that. We do get into some supply chain and sourcing activities as well as part of our service offering. We see our model a little bit different than others in our space, where we're heavily dependent on practitioners that come from a vast knowledge of the business, where we can place them with clients and customers in key areas to solve some of those harder challenges. So you get a bit of an experience of what we've done in this presentation and how we think through dynamics of what's happened in the past and how we look forward to how do we solve for those as we go into the future. The four key areas that we're going to cover today, we're going to kick off with an overview of a higher level of just how COVID-19 impacted the channel. So between food service, retailer, and the processor, and how fast that came on. Then we'll get into more detail specific to retail and food service, what they've been challenged with, how they're impacted, and what they're doing today. Then we'll convert over into how the processors had to balance between what's happened between retail and food service and how they've been impacted from that perspective. And then we'll spend a little bit of time looking at kind of three core areas of where we see the future going, primarily around 2021. Some of these may carry forward past that. That's to be seen, but those will be kind of the core areas of our presentation today. So let's first look at what the demand impact between retail and food service look like. To quickly level set the dramatic impact that happened when COVID-19 actually hit, really it was two things that occurred that started the pressures. From a consumer standpoint or anybody at home, the stay-at-home mandates that were not clear and concise did drive impacts on both sides between retail and food service. So from a food service perspective, as they were driving to get up against restrictions, their demand was reducing very quickly. From a retailer perspective, the panic buying drove immediate increases in demand, which was putting different pressures on the system. From a processor and grower feeder perspective, it became very unclear as where volume was going, what volume was needed, and how to actually meet those needs. With a sudden and dramatic shift in demand and the suppressed capacities that were upon them due to closures and due to other restraints that were there, it became a very confusing first 3 months of how do we manage through this, where do we go, what do we learn from it, and that's what we're going to break down as we go through the next few sections in more detail. So to initially kick off with what happened with demand, this scale here will just break down food service and retail of what's happened. If you look before March, call it 12th, demand was fairly flat. It was actually somewhat positive for food service, and it was lacking or behind from retail perspective. Immediately, if you go into the kind of the four areas that we called out, consumers started to panic buy due to stay-at-home restrictions, unknowing what's happening, et cetera. You can see the yellow line, which is for food service, where that dropped off in a couple different ways. The first drop was just people shifting to at home. The second drop off there is where social restrictions began and more closures and activity was put against food service where they just weren't able to service customers the way that they have in the past. The third drop down is when we had more businesses close, schools shut down. Some of the hospitals were impacted from an operations perspective on that side. So those factors then were dealt with the swings, as you see, up and down from a volume perspective, were driven primarily by shoppers engaging with stores in a different way. We'll call it less frequently. We also had supply issues that were being managed just because of the high demand and or the capacities that were coming out of the processing plants. So that drove the ups and downs as you kind of see through here. The big variance here is seeing how dramatic the shift is. Food service is down, but retail is up significantly more than that, which put even more pressures on the processor side to perform and to keep up with what those needs were based on how the entire U.S. was managing through something they never have in this first 3 months of COVID-19 impact. Now let's quickly talk about the mix between food service and retail. So we use 2019 as a baseline where the business is pretty much split. So maybe buying different things for different purposes, but from a volume perspective, it's about 50-50. Moving into 2020, obviously that would shift, and it's had some pretty good recovery, which we'll touch upon, where retail's at 55% of volume versus food service at 45%. As we look at food service for total performance, they've been down 8% to the year versus the 30 to 35% that they were down in the first 3 months. That's pretty incredible for the recovery that they've already had, while retail has continued to sustain around a 10% increase in volume. So together, that's giving about a 2% increase in growth to fresh meat that's going into these channels and towards the consumer. That's roughly around 250 to 300 million additional pounds processed this past year under constraints, under challenges that the processors had as well. So all in all, that's pretty impactful and pretty important to where we see kind of the industry going forward. Now let's shift into reviewing how this impacted food service specifically. As we think about food service, it's really broken into different operator types, whether it's recreation, governments, business industry, and the big one, restaurants. What we've seen over the last year is roughly 110,000 restaurants have either closed for a long term or permanently, which is going to impact future. Full service restaurants are expected to lose more than a quarter of their units, or 27%. And revenue in 2021 expected to fall well short of 29 results by 17%. So though we're behind in 2020, we still expect this to continue into 21. The recovery efforts for this channel is going to be pretty challenging. They've got a lot of things to overcome as they push forward. And as you see everything there, but that restaurant channel is obviously the big one. You're roughly missing about $10 billion in revenue from that perspective, but everything kind of runs itself up the ladder as you go from there. Now let's spend a little bit of time and talk about the restaurant channel specifically. Anything from fine dining to quick service, fast casual. The way this chart's laid out is getting a better feel for how people are managing their menus. So the lighter color is those that have wanted to add more items to the menu. Very small percentage, which is usually a greater number. Those that are keeping the menu items the same, and those that have reduced their menu items, the brown bar. Where you can see the largest reduction is in fine dining and casual dining, which is going to impact fresh meat probably the greatest versus some of the other areas that are making less change to their menu offerings. So we do see about 90% of the operators keeping or reducing their menu options. And as we go forward into the future, they have stated that they plan to continue to trim their menu offerings further to either drive more efficiencies, cost controls, other aspects that they need to do to kind of reemerge back into the space. that they own today. Now let's talk about regions and consumer sentiment. We'll start off with the region side. As we look at the charts, it's broken out into really two clear numbers by area. So looking at South, Northeast, West, and Midwest. But as you look at the lighter bars, that represents the percentage of people that are willing to engage or desire to engage with restaurants again or currently. The darker bar represents the percentage of those that are looking for the on-premise or in-dining experience. As you look at across these different regions, 40 to 50% of the heavily populated regions are considering a return to dining, which is a good sign, even though they've been a little bit more locked up than some of the other regions. Over 20% of the population still isn't showing that they have a plan to return to restaurants and dining, which is a pretty big gap and one that's going to have to overcome over the next year or two as things change. As we look at the demographics, from that perspective, 60-80% of the consumers do plan to return to either pickup, delivery, engaging with restaurants in some fashion. But only 50% or less are considering a dine-in, regardless of the demographic. As you break it down, baby boomers, it makes sense that they want the dining experience. They've got the highest percentage at 81, but they're reluctant to actually be on premise or dine in at 44%. When you look at Gen X and millennials, they're acting about the same. High percentage still engaging with restaurants, with only about half of them wanting to be dine-in experience. And Gen Z, if they gonna have the money and they're gonna spend the money, they want the experience, they have a higher percentage of on-premise dining. That's where they're gonna put their dollars, less about off-premise or take-home. Now let's flip over and talk about the direct impacts to retail. Let's start with how the consumers are actually shopping retail since COVID actually happened. We know that retail in general is up significantly. This is for the first, call it 3-4 months after COVID happened. If we look at total store and we look at meat department as just a baseline, you can see a significant difference in performance. Both are doing exceptionally well from a sales perspective, but meat's actually outpacing by almost double. And when you look at households that are shopping the store, and the way that this is calculated is based on the frequency and how often is that household actually entering that location or a store type. Total store is seeing a reduction in households, meaning that they're coming in less frequently. And when we look at total meat at +3, those same households are actually making a trip just to buy protein because it's perishable. So they're stocking up in their canned goods, they're stocking up on their paper goods and everything else that's out there, making that shop every 2 weeks potentially. Where meat department, they're still coming in every week, if not multiple times for that shop. On the basket size, that's what we're also seeing. So we're seeing larger baskets because we're making fewer trips. So total store, the basket is much larger because they're making that one big trip for all the non-perishable types of products. In meat, the basket's still up, but it's smaller. They're still stocking up on meat products, but they're not buying more than they can eat or more than they can freeze at a given time. So the big moral of the story here is we're seeing a lot less trips from consumers. We're seeing much bigger baskets that are making it a purpose when they shop, and that's equaling more sales. So from a retail perspective, you have less opportunity to actually win that customer. So making sure you're in stock, you have the right items, you have the right positioning for them is more critical than ever. On the next 2 slides, we're going to summarize kind of 4 key areas that retailers had to manage through and manage through differently. First one is products. From the beginning, it was limited of what you actually could get your hands on and actually put to shelf for your consumers. So people saw a lot of different products, different packaging, different brands, different concepts at the shelf, and that didn't matter. As the years kind of progressed, things have got better, in stocks have been improved. It's definitely become a different mantra from that perspective. The one thing around product is it has enabled retailers to want to better understand what case ready means and what third-party models may look like to help them with store labor issues that they had and or food safety concerns as we progress forward. From a pricing perspective, this definitely shifted the way they think about the business. Normally, you would be looking at outfront planning, call it 6 to 10 weeks, without understanding exactly what the availability things are, where pricing was, etc. That window shortened up, which puts pressure back on the processors as well, without visibility that they normally had in the past. From a features and everyday pricing perspective, they were also limited to being able to move on pricing based on gouging. And for features, there just really wasn't room for it any longer. So most retailers stopped promoting product, ran their everyday pricing, or brought pricing down to where it was manageable for them to keep in stock with the products. Because what was most important was having it for their consumers versus playing the features and ad promotional games. For these next two, let's start with associates. We all know that from a skilled labor perspective, it's already thin in the industry and thinning as the days go on. Stack that on top of the requirement for working longer days, longer hours, more, and asking more of them was a huge challenge. And most of them rose to the occasion. The retentions that were required, base pay increases, bonuses to come in, a lot of the same things that the processors were up against, the retail channel was up against as well. And that was just to focus on the basic blocking and tackling of ensuring that their departments were ready enough for customers to shop, and those have greatly improved over the last, call it 6 to 8 months. From a shopping perspective, a good growth, not as large as some may have thought, but online shopping is definitely taken a bump. Consumers have been a lot more comfortable with either curbside pickup and or home delivery, and it's less about the non-perishable items. But as we think about the perishable items, meat, produce, and those have always been the holdback. Those have always been the areas where consumers didn't want to try it, didn't trust it, didn't want to spend that type of money. Well, that day has come, and they're starting to trust that. The programs that have been put in place by key retailers are working, and we continue to see an uptick in that type of service offering. So we expect that to be a growth as we kind of go forward versus just your traditional brick and mortar type of shop.
So now that we have a better understanding of the impacts to the food service and retailer channels, let's examine the competing dynamics from a processor perspective. During the initial time frame beginning in March and lasting through the end of May, we saw significant impacts to processor capacity. More than 80 beef and pork packing plants reported confirmed cases of COVID-19 during this time, impacting 30 to 70% of their workforce. And for facilities that were forced to close, these closures lasted on average more than a week, with some instances of closures lasting 4+ weeks. Processors were dealing with workforce shortages during this time, not only due to actual COVID-19 infections, but also due to an overall hesitancy by their employees to return to the processing plants due to the unknowns surrounding COVID-19 infection. Processors implemented enhanced cleaning protocols to mitigate the spread of COVID-19. They were also forced to scramble to provide PPE for their employees at a time when PPE shortages were widespread across the country. They began retrofitting for employee safety, providing for social distancing not only on the lines but also in gathering areas such as lunchrooms and lockers. These measures had direct impacts on line speeds, creating the need to slow them down. Processors also began providing testing and additional medical support at their facilities for their employees, as well as educating employees on how to mitigate and prevent community spread outside of work. Employee retention became a major focus for processors at this point. Due to the lack of available labor in the areas where they operate, they needed to resort to retention bonuses and hourly rate increases to continue to have enough employees on hand to process and run their plants. So as we can see from this chart, demand shifts added to the supply chain pressures. And we'll look at it in 3 phases. So the first phase is pre-COVID, creating the baseline. At that time, food service was running up 8%. Retail was flat to slightly down. And as Jason covered earlier, total volume at that time was evenly split pretty well between the two channels. Once we entered the COVID lockdown phase, you can see that the food service curve immediately starts to drop down. And as discussed, that was due to the initial lockdown measures that created issues with consumers being hesitant to venture out. At the same time, that initial spike on the retail side, that represents that increased demand from consumers. But we need to understand that at that point, the supply chain had not made any adjustments. So that was pretty well emptying out the supply chain. And so that was compounding what we see as that significant drop for those 3 to 4 weeks in retail demand. That really represents not only an empty supply chain, but also the additional supply constraints due to plant closures and slowdowns. And then you had a long ramp back up as processors came back online and adjusted their operating strategies, and the supply chain began to fill back up, and you saw the stabilization in the COVID reopening phase all the way through the last 6 months of the year for both food service and retail. During the COVID lockdown phase, we saw food service volume demand reduced to 50% of historical norms. And their mix of the total volume dropped as low as 35%. In the last 6 months, they've been able to recover quite a ways to where they're only running 8% down over prior year for the full year. And their mix has rebounded back up to 47%. Now let's drill down and look at the specific impact to the primal mix between food service and retail during the COVID lockdown phase, running March through May, when we saw the largest overall impact from COVID. As you can see, the vast majority of the primals saw a shift in volume demand from food service to retail by about 11%. The exception to that is grind volume, which initially saw a decrease during this time frame of about 8% in total volume. This was driven primarily by the fact that historically a vast majority of raw materials for grind went into the food service channel in formats that are not retail friendly. So there was a lag as the processors had to shift from food service formats into more retail ready formats to meet the demand on the retail side. This mix continues to place extreme pressure on processors to identify outlets to maximize sell-through of the cutout, as they have to identify traditional food service items and repurpose them into more retail-ready formats. Let's wrap up by looking at 4 specific areas that processors have had to address to maintain supply in the supply chain for their customers in reaction to the increased demand. First is safety measures. We've talked about this, installing partitions between workstations, daily enhanced cleanings, PPE for their employees, employee health, providing temperature screenings and testing within the facilities, educating their employees how to reduce the spread of COVID-19, not only at work, but also in the community. Social distancing, creating staggered break and lunch schedules, and also creating outdoor physical space during breaks to give the employees opportunity for social distancing, and also installing plexiglass barriers on the tables in the lunchrooms and other employee break locations. And then employee retention. We talked about this a little bit, but this has been ongoing throughout 2020 with the reduced availability of potential workforce. Processors have had to implement retention bonuses, increase hourly salaries, and also provide food donations to support the employees' families. I think it's important to understand at this point that with all of the processors have had to invest, this does look to be the new normal. This isn't going to go away overnight. And it's going to be an expectation going forward as well.
Now let's spend the last few minutes talking about what we see kind of looking forward. Let's start with the first key change, and we see that as future demand and how that's actually going to roll. So How will demand change as regulations relax? And as we look across food service, retail, and processors, each one of these are going to have to deal with it slightly different. For food service, changing to adapt it increases demand. They're going to have to change the ways they've been doing it as those come back online. Permanent closures with limited choices, that's going to put more pressure and probably faster pressure on those that stayed open. The restaurants that were early adopters, they'll be leading the curve in recovery, and we expect that. On the retail side, we see them continue to run 3 to 8% above historical baselines. Not at the same rate as 2020, but above 2019. The return of food service and competitive activity will play a role. Trying to continue to keep your share, keep the customers, and really their focus is keeping them out of food service, which we know there'll be a transition back to at some level. Meal preparation at home will provide a great share to retail. So there's going to be a large focus on that to continue to keep people eating at home, making meals at home, and using the skills that they've gained. On the processor side, adapting to increases needs of food service is going to play a role. Flexibility to the needs of the channel as regulations change will be a focus, and identifying better ways to align with online shopping, whether that's new packaging, new cuts, new ways to feed that case-ready type model, that case-ready ideas that is really being driven by the retail channel. All right, the second key change we see is channel engagement. So really, how will each channel respond as things start to relax? So for food service, there is a perception that there's pent up demand, but there's also a hesitancy from consumers to still want to go back into restaurants and the way of life. So there's still a bridge that has to be crossed there. Proactively adapting to future regulations is something that is going to have to be learned and upheld to as things move forward. Enhancing online pickup and delivery options, that has shown to be a positive for that industry, and how they continue to improve upon it to make it better and easier for consumers is just a win. On the retail side, retaining those new meal occasions that they gained during COVID and really protected that meal occasion from going back to food service. Promotional activity we expect to accelerate, get back to 2019 type activity as they protect their share. Pricing will become a different platform that they haven't dealt with as much in the last year or so. Enhancing shopping platforms, continue to put pressures on delivery, curbside, pickup, you name it. Those are platforms that are here to stay. Consumers have shifted how they want to get their products, and we expect that to just grow. On the processor side, evaluating how to best align with regulatory changes that meet the needs of associate safety and expectations from their customers. We see them somewhat in the middle of the needs of retail and food service, to the perspective of ensuring that everything that they're receiving has the safety and the precautions aligned with it. A continued dialogue with each channel to support future requirements as they come up is a must. Things will change, things will be different as we go forward. And then refocusing on branded and grade-specific programs will be a big one. For a period of time, whether it was retail or even food service to a point, they were just looking for product. It was less grounded on the brands that they sell and the brands they stand behind, more about what can I get on my shelf today for my customers. As we go forward into 2021 and 2022, we definitely expect to see retailers get back on specific programs that they have, that they're proud about, and how that best aligns with those programs. Now let's talk about operations. Really, there's short and long-term impacts to operations across all three of these. Food service, they've got financial impacts, whether they're re-emerging, they're surviving, they permanently close, those decisions. Simplification of menu offerings, which we talked about, we see those driving key efficiencies and potentially better offerings for the consumer. Business model redesign to capture off-premise dollars. So how do they continue to put pressure on that where they've already won it over in the last year? Retail, associate retention, benefit costs are now part of the budget, so that's going to put impacts on their profitability. They do and they have been evaluating third-party processing options at a higher level than before to improve in-stock conditions. And then enhancing marketing online and pickup platforms will definitely be a focus for all. They've always been there, but it'd be elevated to some state. On the processor side, benefit costs, associated health and safety, that's also now part of their budget. It's going to be an impact to that side. Processing efficiencies to address the safety modifications will be something that evolves over a period of time as well. And investments in new capital and capabilities to the changing consumer demand, that's something that they'll learn and they'll have to adapt to based on the needs of both retail and food service as time kind of goes on through 2021 and 2022 most likely. We just want to thank you guys for this short time. Look forward to the Q&A session to follow. Thank you.